stockmarketfunding.com. Here we are again, and we're going to do the Dow chart, Dow Jones, and this is a monthly chart, okay? And once again, we've already given you enough history on stockmarketfunding.com to go and find out the 10-year Dow history. More importantly is that we take people all the way back to 1970 and what the markets were like all the way up to various tops, how they given up, how they made the top, and how they given this one up, what this next top will eventually end up being. And what I am going to tell people is that the stimuluses have worked and all, but right now the Dow is having a problem because, number one, we are overbought on the Dow. And we were overbought last week, and even though that the Dow was down 158 points, divergently you went a little bit higher and overbought. People don't even know what that means. Basically, we had the big correction here. And in the last week, which I'll show a weekly chart, is that I'm going to show that we are overbought. I'm going to show that they're trying to get this to a monthly buy signal. A total V shape, which is not out of the ordinary. It happened in the 1930s. That's a lower V. This is a lower V right to where we're at right now. That's that part of the V. Ultimately, the big part of a full retracement would be a total V back up here. Right now, during the cycle, is that these monthly buy and sell signals, as we tell other people, the last time that we had a sell signal was in year 6/1 of 2002. Then we had a sell signal on 9/1 of 2008. They only come so many years. So these were 6 years apart, these monthly sell signals. This one was greater than any other. And basically, we get these monthly buy signals at times. And we can see what happens back in the early 80s when the bull market took off to that high. We created a very long-term structured monthly buy program on the Dow until we finally peaked. And we peaked and we went into that sell, and we peaked at the top there just as we did here. And now we came off the bottom. This is where the wealth is created, down here. This is where the wealth is always created, down here. And basically, we're about to pop that monthly buy signal. That would take, you think that the market's been exuberant now? Economy is better because it's been bought up by your taxpayer dollars. Growth has improved a little bit, but not much. And that's the economic side of this V shape right here. What I want to emphasize is that we've had the reversal, we're overbought, we're ripe for a pullback. Once we pull back, we're going to see if we can take out this trend line over here and take out the last highs. Right now, as I said a week ago, that we were going to be in a pullback phase, and we were. But remember that the Dow is 30 components, and the earnings have been good. And it's not hard to walk 30 stocks higher. It's very easy to walk 30 stocks higher relative to all the other indexes, NASDAQ 100, NASDAQ Comp, and S&P. What I would like to tell you, though, that if they pop that buy signal, they know ahead of time that that's going to suck more money off the sideline. International managers, fund managers will come in the market. There have been. More money will want to get involved in the market. There isn't any money to be made in the money market. Mutual funds are so-so. But here's the thing. They know what triggers the money back in. Once that money gets triggered, if we get that monthly buy signal, yeah, we would go long off the pullback. And we will short these tops like we did right into resistance and take short-term gains. On a daily chart on the Dow is that I will show you this whole daily chart. This is what the public looks at. And basically, when I show you some of our indicators down here, we're not nearly as overbought short-term as we were. We've had the reversal on the Dow, but more importantly is notice, just like I said on the S&P chart, is that's a doji, daily doji. There's the reversal. Here's the counter trend to the lower high. That was high 1. This was high number 2, and another big reversal down. And it's going to be a short-term bottom right above the 11,000 move. Now, remember, it's the daily chart, and we really don't got no support till we get down to the 50-day simple moving averages. There's a 40-day moving average right here. You could get a bounce. What we're going to be looking at next week is there's a sell through that low. But when trends start, they start reversals at lower highs. Here they are. High 1, high number 2, sell bar follow through, doji reversal, counter trend reversal. So basically we said that this was going to happen. Now it's going to the left. The right side of a market is when you make a high, you pull back, you make another high, you consolidate, you make a high, you pull back, you make a high, you pull back, and guess what? You made that peak of that high. And that's where a market's making a series of higher highs. The trend is going completely to the right. Now, on a reversal trend, as we show people, is that it starts quite the opposite. You make the low, you bounced. That means that the next low would be somewhere down in here. You would bounce. Here's half of the daily bar. If I'm closing below half of this daily trend bar, that's the SMF Pro Trader bar. If I come down and I bounce into here and roll over, so I come down, say I bounce back into that lower bar, and then I roll over, and it's just the opposite. It's how they make the lower lows. So let's draw a little X, if I can. Another low would be down here. You bounce. First, you got to take out this low. You would bounce back up. If I'm closing below half of that daily bar, and I would have to consolidate and then make a break higher and take out this high to say that these markets in the very short term we're going to take out that high. But as long as on a daily chart that I'm below half of that reversal bar, guess what? Just like this reversal bar here, half of the bar, you got above it, but you didn't close above it. You're back below half of the original down bar right here. So you make the lower low. Trends make lows. They bounce before they make the next lower low. People get sucked in on the bounce, and then there's the big reversal. And we teach you that another thing is that the daily bars, you were overbought for a long time, even though that you were overbought on a daily over here, you continue to make higher highs. That's part of the people chasing the market. Pull back, I got to get in. Pull back, trains left the station, I got to get in. I got to get in. So basically, this is your high. This is the second high. That's reversal 1. That's a doji reversal over here. So let's take a look at it. This bar here is a narrow range cross. The doji, it's confirmed when that bar cannot close above that body. Doesn't matter if this was daily, weekly, monthly, 3 minute, 15, 60, or whatever, all the same, nonetheless. And yes, here's the thing. That high right there, there's your high reversal. There's your follow through the next day. Just like this the day after. There's the counter trend. Everyone moved in at the end of the month. And basically, I'm going to do a weekly chart on the Dow separately so you can see what the difference between that is. Drawing a trend line right here in the whole move. And basically, this was where this diagonal line, this is breakout 1. Trend kept going, support 2 on the diagonal. We came down, this is diagonal. This held support within the uptrend. So did it undercut it, closed above it. And now we're reversing below this. So as long as I'm closing below 11,200, I'd have to consolidate. This would have to turn around. Percent DS has been falling. The CCI is in negative territory. Last week on the uptrend, it was positive 59, negative 40. But that's what the daily looks like. If the blue line turns over and goes down, we're going down lower. Dow's got good support for a bounce right around that 10.8 area. And we'll move on to the weekly chart in the next video.